All the main players in Bitcoin have switched teams and retail investors are now the spectators. Has the bull market script been rewritten? Only 450 coins are produced a day, but institutions absorb 1,460 coins a day. It would be strange if this market is not crazy, right? The US Treasury Department starts to live by interest rates with $36 trillion in debt. Trump is short of money and Powell is tough. Stablecoin Big Brother is about to be asked out of the group chat. Tether really ran into the genius iron fist this time. Does Kwon want to overturn the case by relying on a legislative bug? The strongest script killing in the cryptocurrency world is here. Stablecoins have become the currency's nuclear button. Which national team in the world dares to take the lead?
Thursday, June 26th, BitcoinTV English channel. Where is the coin chain? I am Michael. Let's start with the 24-hour data headlines of the coin circle. Recently, the on-chain data has made it clear that Bitcoin is changing hands, and the supply structure is concentrating from retail investors to institutions and large funds, which may become an important driving force for the new round of bull market. Let's talk about retail investors first. The addresses holding less than 1 Bitcoin have reduced their holdings by nearly 55,000 in a year. Now there are only 1.69 million Bitcoins left, and the average outflow is about 220 Bitcoins per day. What's more interesting is that the relationship with the price is negative 0.89, which means that they chase when it goes up and cut when it goes down. It is a typical example of emotional head-shaped operation. On the other hand, those big money holders with more than 1,000 Bitcoins in their hands have directly increased their positions by more than 500,000 Bitcoins this year. Now they hold a total of 16.57 million Bitcoins. What's even more exaggerated is that they are still buying in net every day, several times more than retail investors sell, absorbing an average of 1,460 coins a day. The key is that they don't buy randomly, they are positively correlated with the price plus 0.86 value, sell at low positions, sit firmly at high positions, and are the real trend controllers. The current Bitcoin market is a bit like institutions buy in packages and retail investors sell silently. Institutions buy so fiercely that the amount they absorb is 7 times more than what retail investors sell. Don't forget, there are only 450 more coins a day now. How can these big eaters eat them? And the strange thing is that retail investors are not FOMO at all this time, and they are still reducing their positions, which means that the market has not yet heated up. What do you think of this situation? The big investors control the market, and the market is ready to go, just waiting for an ignition.
Data shows that over the past month, Bitcoin has clearly been moving and has been flowing out of exchanges. Although the price has fallen to around $100,000 twice, the market has not panicked and sold off as before. Instead, as the price fell, some people withdrew the coins and transferred them to off-chain cold wallets, especially on June 22nd, when geopolitical risks triggered a short-term decline. Only 1,937 coins flowed in. As soon as the market rebounded the next day, the exchange immediately had a net outflow of 6,253 coins, indicating that some major players took advantage of the low price to frantically sweep up the market. The action was clean and neat, and the rhythm of absorbing funds was clearly grasped. Now it is institutions are hiding from buying at low prices, and retail investors are still watching. Bitcoin Spot ETF. It has also been absorbing funds for 13 consecutive days. Yesterday alone, $547 million was poured in. The progress bar is almost full. To put it bluntly, Wall Street's calculations are very clear. They build positions at low levels and steadily buy chips. When the market really takes off, they will have already secured a first-class seat. While you are still waiting and watching, others have already fastened their seatbelts and are ready to take off. In the past month, the price of Bitcoin on Coinbase has been higher than that on other exchanges. The premium index on June 25th
was still reported at 0.056, and it has always remained in the positive range. This means that the money from the United States is still pouring into Bitcoin, and it is the kind of rush to buy. You think that everyone will panic when the price falls, but in fact, the institutions have just warmed up. And while you are hesitating, they have quietly increased their positions at the bottom. You should know that the main players on Coinbase are not retail investors, but large American investors, high net worth players, and institutional funds. This group of people has always seen farther than us, has a more stable layout than us, and buys more fiercely. The reason why they don't wait for the wind to come is that they have long regarded Bitcoin as a substitute for gold, as an anti-inflation and safe haven asset. Now the market structure is already very obvious. The protagonist has changed. Retail investors are still asking, can I still buy? And institutions have secretly bought and are ready to open, which shows that this wave of market is really not decided by retail investors. Please like and follow us to sort out the latest developments in the cryptocurrency, blockchain, and mining circles within 24 hours. Click the small bell to join the channel and become a member. You can get the member wealth password from Monday to Friday. 2 days ago, Trump got angry on the social platform again. This time, the target of his anger was an old acquaintance, Federal Reserve Chairman Jerome Powell. He said Powell was too slow and gave him the nickname Mr. Too Late. Trump was full of fire, saying that Europe had cut interest rates 10 times but the United States was still not moving. Now the economy is stable and inflation is not high. If we quickly cut it by 2 to 3 percentage points, we can save $800 billion a year. Since he took office in January, Trump has publicly urged Powell at least 17 times. He was not polite and even called him idiot, but Powell is not a pushover. He was calm and motionless. So the question is, why is Trump so anxious to cut interest rates? And why would Powell rather be scolded than let go?
According to the data from the U.S. Treasury Department, the interest expenditure on the U.S. federal debt has reached $776 billion in the past 8 months, up 7% year-on-year. Trump believes that lowering interest rates can reduce the fiscal burden, saying that if it is reduced by 2 percentage points, it can save $600 billion a year. However, economists warn that this move may backfire. Powell said that although there may be signs of cooling in the job market, it is still stable overall, and there is no need to cut interest rates for the time being.
I'm happy to say now it actually is coming down quite regularly. That's very good news. That's been the part, really it's been the service inflation that's been stickier than other parts of inflation. So that's good news for people, I think, and it is showing through into measured inflation now. Again, in the long run, the best thing we can do is restore price stability and let the market work.
Trump urges Powell to cut interest rates every day. To put it bluntly, he is short of money. His big budget infrastructure blueprint costs a lot of money, but now the US debt has reached $36 trillion. The interest alone is $928 billion a year, which is half more than the military expenditure. It is like using the money for arms to pay off credit cards. Trump's calculation is very simple. If the interest rate is reduced by 1%, $360 billion can be saved every year, and 30 aircraft carriers can be built at one time. But Powell refuses to cooperate. He looks at the data. The CPI in May is a little low, only 2.4%, but the core PCE is still stuck at 2.8%, and it has not come down for 6 months. The Federal Reserve feels that the economy can still bear it, and it is not time to rely on interest rate cuts to boost blood. So there is an operation of one is as anxious as an ant on a hot pot, and the other is as calm as a hot spring. The United States is finally going to register stablecoins. In June, the Senate just passed the Genius Act, preparing to bring stablecoins into the ranks of the regular army. Simply put, whoever wants to issue stablecoins in the future must not only use reliable assets such as cash and US bonds as reserves, but also submit audit reports every year and accept the US regulatory stamp. President Trump slapped his thigh and said, "I am willing to sign. the House of Representatives is still under review. However, this set of rules looks like it is tailor-made for Tether, which means that you can no longer rely on gray areas to get by. But don't panic too much. The bill gives a 3-year buffer period. In the stablecoin track, the next step is to hold a certificate to work to have a future.
Recently, the Wall Street Journal pointed out that if the Genius Act is officially enacted, it will have an impact on the stablecoin market, especially posing a major challenge to Tether. Tether currently has a circulation of $156 billion, accounting for 2/3 of the market, but its reserve assets include Bitcoin and precious metals, which do not meet the bill's requirements for high liquidity assets. In addition, Tether faces regulatory review pressure due to its use in international payments and circumvention of sanctions, and may become the biggest victim of the bill.
Y ahora mismo en el entorno de Estados Unidos, en el entorno latinoamericano, en El Salvador, y luego, considerando que el crecimiento del mercado asiático va a ser brutal, hace que Tether se siga consolidando como la principal stablecoin, yo creo que en este punto creo que Tether ganará la batalla.
Tether recently announced that it will move its headquarters to El Salvador. While changing its address, it is also thinking about how to get a compliant green card from the Genius Act, and is also preparing to launch a US-exclusive version of stablecoin to try its luck. But if it really can't handle this process, Tether may have to completely withdraw from the US market, and the throne of the stablecoin leader will have to give up. On the other hand, the old rival Circle is like a young wife officially made right by Wall Street this time. Not only has it been successfully listed on the New York Stock Exchange, but its stock price immediately jumped by 34% as soon as the bill passed the Senate. Although the size of Circle's USDC is less than half of Tether's, and its net profit last year was only $156 million, Tether made a profit of $13.7 billion, but it wins in terms of good personality, clear audits, and good supervision. The ability to attract fans is first class, and even Wall Street bigwigs are lining up to support it. In the final analysis, this battle for stablecoin hegemony has changed from who has a hard fist to who is more obedient, and it is a battle of strength and compliance. One is wild and aggressive, the other is obedient. It is hard to say who will have the last laugh.
Accused of defrauding $40 billion, can Kwon turn his life around with the new law? From policies to supermarkets, stablecoins are officially out of the circle became a national standard.
When it comes to Kwon, people in the cryptocurrency circle remember the big things he did. He created Terra USD, but the project collapsed and investors went back to the pre-liberation era overnight. He was arrested in Montenegro in 2023 and was extradited to the United States at the end of the year. He is now facing 9 felonies, including securities fraud, market manipulation, and money laundering. He could be sentenced to up to 130 years. The United States is still changing the rules of cryptocurrency, such as the Genius Act, which is figuring out how to define stablecoins. If the law is changed, the prosecution's logic of the accusation may be completely empty. Kwon may be looking forward to this big change in the bill to change his own script.
In 2024, a U.S. jury ruled that Terraform Labs and its founder Kwon defrauded investors. A civil lawsuit was filed immediately. Paul Engelmeyer, a federal judge in the Southern District of New York, is reviewing whether the ruling will affect Kwon Do-hyung's criminal case. Kwon Do-hyung denies all charges and is currently being held without bail. His criminal trial is expected to begin in 2026. Year 1 the judge had 4 in a status hearing in June. The company made it clear that it was paying close attention to the Genius Act, which could affect its securities fraud charges.
The CEO of the blockchain firm was a key figure behind two digital currencies that lost what's been estimated at over $40 billion last year. Kwon faces an 8-count indictment made public in the U.S. District Court in Manhattan. The counts include securities fraud, commodities fraud, wire fraud, and conspiracy.
The prosecutors are still using the old textbooks to accuse Do Kwon of securities fraud. However, the textbooks in the United States are about to be changed. If the Genius Act is passed, redefining what is considered a security and what is a fraud, then what Do Kwon did at the beginning may become a test of innocence. For example, if the most critical Terra USD is not a security under the new law, then the prosecutor's confident evidence bomb will be silenced. Now the case is still dragging on and Do Kwon keeps shouting not guilty. But if the new law is launched halfway, the court will have to worry about one thing. Should the play be played out according to the old script, or should a special update of the bill be staged temporarily? This is really the legal earthquake of the currency circle. It is not surprising that the plot is reversed. Recently, stablecoins have become very popular. With the release of policies and the rush of giants, everyone is jumping on board. The United States has just passed the Genius Act, and USDC is smiling. The European Union has also loosened its stance and allowed foreign stablecoin swaps, paving the way for global expansion. MasterCard has teamed up with Paxos and PayPal to launch stablecoin card swiping. Even Walmart and Amazon are eager to spontaneously put money on the chain. The most dramatic thing is that Trump supports WL. The platform has also joined the bandwagon, issuing coins with audit reports, and even the political arena couldn't sit still. In this situation, stablecoins are not just toys in the cryptocurrency circle, but have become a new financial entrance that various forces are vying for.
It's pegged to the dollar, so it's it's a payment stablecoin, something that can be used for payments in a digital format. This is going to create more versatility for the U.S. economy and move us into the 21st century.
Russia launched the ruble stablecoin S7A5 in Kyrgyzstan in February this year. Within 4 months, its transaction volume on the Grynex exchange exceeded $9.3 billion, with a market value of $151 million and 12 billion coins in circulation. On-chain data shows that its transactions are concentrated in 124 whale wallets, suspected of high-frequency liquidation. S7A5 claims to maintain a 1:1 reserve peg with Pромsvязьbank, which has a defense background. Although officials deny any connection with the sanctioned platform Garantex, on-chain data reveals its potential connection, raising concerns about compliance and money laundering risks. At the same time, the new president of South Korea threw out the basic law on digital assets as soon as he took office, setting the tone for the crypto industry and promoting the development of the Korean won stablecoin. 8 major banks including KB Kookmin Bank are working with the Blockchain Association and the Financial Settlement Institute to set up a joint venture, which is expected to launch the Korean won stablecoin from the end of 2025 to early 2026. At the same time,
stablecoins are no longer just a settlement tool for buying coins and transferring money within the currency circle, but have gradually evolved into a key chess piece for countries to engage in financial games on the chain. There are 3 reasons behind this. One is functional spillover, the second is sovereignty competition, and the third is geopolitical confrontation. First, the application scenarios of stablecoins are spilling over to the off-chain world, from cross-border trade, payment networks, to financial settlements. For example, Africa uses USDT for procurement settlement, and Visa and Yellowcard cooperate to promote stablecoin payments. These all show that stablecoins are becoming an alternative path to the digital version of the US dollar. Secondly, governments of various countries have begun to issue coins, intending to regain control of digital financial sovereignty through stablecoins. In addition, countries such as Japan, the United Kingdom, Thailand, Brazil, Indonesia, and Kazakhstan are also promoting pilot projects or regulatory discussions on legal currency-anchored stablecoins to varying degrees. The common point behind these projects is that they are no longer just technological innovations, but monetary strategic deployments at the national level. Stablecoins are becoming the monetary nuclear button of the digital age. Whoever gets the first move will have the possibility of restarting the script of global finance.
According to the Wall Street Journal, 3 OpenAI researchers have joined Meta, including Lucas Bayer, Alexander Kolesnikov, and Xiaohua Zhai. Recently, Metaplanet's Bitcoin holdings have risen to 12,345, surpassing Tesla's 11,509, and the listed company's holdings have risen to 7th place. According to Farside Investors, the U.S. Ethereum spot ETF had a net inflow of $60.4 million yesterday, of which ETHA had a net inflow of $55.2 million. Crypto trading platform Kraken announced that it has obtained the MiCA license issued by the Central Bank of Ireland and is authorized to provide compliant crypto services in 30 member states of the European Union. Australian police have contacted more than 90 citizens to investigate suspected crimes involving cryptocurrency ATMs. One of the victims was a 77-year-old widow who lost 433,000 Australian dollars, or about 282,000 US dollars, in an online dating scam.
Okay, the above is the main content of today's program. Our channel focuses on valuable news in the currency circle, chain circle, and mining circle. There are news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow it. You can also become our member and receive the member wealth code from Monday to Friday. Let us become rich together and add a zero to our assets in the bull market. See you tomorrow.